Before we get to today's picks, I want to clarify something. I have noticed queries about why I've begun discussing stock fundamentals, news, and other non-technical details in these daily videos, despite this channel's focus on quantitative trading. Let me clarify, our algorithm for selecting daily oversold stocks established in 2019 remains unchanged. So why the new layer of commentary? The answer lies in a blend of curiosity and a deeper search for understanding. Over the years, I have always wondered about the stories behind the stocks picked by our algorithm. How do these selections, which we might only hold for 24 hours, fit into the broader market narrative? What can they tell us about market behaviors and trends? I have always seen each of our daily picks as a character. This exploration stems from a desire to delve deeper into the characters behind our daily picks. For years, I have been eager to understand the context around these daily picks, their dynamics at play, and the factors influencing these picks. It's about reverse engineering these picks through a conventional analysis lens. By exploring fundamentals and news, I aim to learn more about my daily picks and, in the process, video journal it. The goal is to satisfy my curiosity, offer a richer view of market dynamics, and who knows, potentially uncover insights and patterns that could inform new strategies when we do a retrospective at some point. And by sharing it with my followers, I aim to foster a community of learning and exploration. I hope this reassures you that our commitment to our quantitative foundation is unwavering. Today's pick, number one, is WDAY. Workday, Inc. provides human capital and financial management software solutions. The recent sentiment around Workday stock being oversold might be influenced by various factors, including its financial performance, market position, and analyst forecasts. Here are some key points to consider based on the recent news and analysis. Financial performance. Workday reported a strong financial performance with significant growth in revenues. For fiscal 2024, the company reported $7.25 billion in revenues, an increase from $6.21 billion in the previous fiscal year, indicating robust growth, market position, and competition. Despite its strong performance, Workday operates in a highly competitive with significant volatility. This competitive landscape, combined with the high volatility inherent to the technology sector, might contribute to market sentiments leading to the stock being considered oversold. Analyst forecasts and ratings. The consensus among Wall Street analysts seems to lean towards a moderate buy for WDAY shares, with a range of price targets, suggesting optimism about the stock's potential upside. However, concerns about limited near-term upside potential and the challenges of operating in a competitive and volatile sector might temper bullish sentiments. Technical indicators. The stock's performance in 2024 has seen a slight decrease, with a drop in its share price from the beginning of the year. This performance, coupled with technical indicators like the RSI, might contribute to perceptions of the stock being oversold. It's important for investors to consider these factors along with broader market trends and individual investment strategies when evaluating Workday's stock. The company's strong revenue growth and strategic positioning in the cloud-based enterprise applications market are positives, but the competitive landscape and market volatility require careful consideration.
Imagine you have a lemonade stand that's really popular in your neighborhood. Your stand is like Workday, a company that uses computers to help other businesses run smoothly. Just like you count your lemons and keep track of your sales, Workday helps companies keep track of their money and people. Now imagine some days you sell so much lemonade because it's really hot outside, and everyone loves your lemonade. That's like Workday recently. They've been doing really well, making more money because more people want what they're selling. But then, imagine there are lots of other lemonade stands popping up, trying to sell their own lemonade. This makes it harder for you because now people have more choices. Workday is in a similar situation. Even though they're doing great, there are many other companies trying to do what they do, making it a big competition. Sometimes your friends or people walking by might think, I've seen so many lemonade stands, maybe this one isn't that special. And they decide to wait and see if they can get lemonade somewhere else later. In the grown-up world, this is kind of like when people think a company's stock, which is like a tiny piece of the company you can own, isn't worth buying right now. Maybe because there are so many options, or they're waiting for something to change. For Workday, even though they're doing well, some people might think it's not the right time to buy their stock. But just like how you know your lemonade is the best and you have lots of loyal customers who keep coming back, Workday has a lot of good things going for it. They're making more money than before, and lots of people think they will keep doing well. So, even though it might seem like not everyone wants to buy their stock right now, they have a strong lemonade stand. Company, and they're working hard to stay ahead in the race. So, the story of Workday is a bit like running a lemonade stand in a busy neighborhood. Even when competition is tough and not everyone is convinced to buy your lemonade right now, you keep making your lemonade better and believe that people will see how good it is. Just like you stick to your recipe and keep smiling at your customers, Workday is sticking to what they do best, hoping more people will want to invest in them.
Today's pick number 2 is VSCO. Victoria's Secret, an intimate specialty retailer, offers an assortment of modern, fashion-inspired collections. These include signature bras, panties, lingerie, casual sleepwear, athleisure, as well as prestige fragrances and body care. Based in Columbus, Ohio, Victoria's Secret & Company operates within the leisure and recreation products industry, which is ranked 194th out of 252 industries by Zacks Investment Research. Victoria's Secret & Company, VSCO stock experienced a significant 30% drop, primarily attributed to its mixed Q4 earnings report. While it exceeded earnings expectations, it fell short on revenue, reporting $2.08 billion against an anticipated $2.9 billion. Additionally, the company's weak revenue outlook for 2024, estimating $6 billion compared to Wall Street's expectation of $6.18 billion, and a disappointing Q1 2024 revenue guidance suggesting a mid-single digits decrease compared to Q1 2023, have contributed to investor concerns. These factors combined have led to a substantial sell-off, reflecting a loss of confidence in the company's future revenue and growth prospects, marking the stock as potentially oversold.
Imagine you're a famous cookie maker in town, known for the most delicious cookies. Every year, you hold a big cookie sale, and people are always excited to see how many cookies you sell and what new flavors you've come up with. This year, you told everyone you planned to sell a huge mountain of cookies, more than ever before. But when the big day came, you only had a large hill of cookies, not the mountain everyone was expecting. Sure, the cookies you sold were super tasty, and you even made more money per cookie than you thought you would. But because you didn't have as many cookies as you said you would, some people were disappointed. Then, you told everyone that for your next big sale, you're only going to have a little more than a mound of cookies, not even a hill, and definitely not a mountain. This made even more people worried. They started to wonder, if the famous cookie maker isn't making as many cookies, does that mean fewer people want them? Or is something else going on? Because of this, some of your biggest fans, who used to buy lots of cookies to support you, started to sell their cookie vouchers to others at lower prices than they bought them for. They were worried they might not get as much value from them in the future, seeing as you're not selling as many cookies as everyone hoped. This is a bit like what happened with a company called Victoria's Secret & Co. They're known for selling clothes, not cookies, but the idea is the same. They said they would sell a lot, but then they didn't sell as much as they thought. And then they said they might sell even less next time. So people who invested in the company by buying its stock started selling their shares, worried that the company might not do as well in the future. This made the price of the stock go down, just like the cookie vouchers being sold for less money.
Today's pick number 3 is DAVA, also known as Endava PLC. Endava provides a range of information technology services, including software engineering, cloud transformation, test automation, and technology consulting. It caters to sectors like finance, insurance, healthcare, retail, consumer goods, media, technology, and communications. Headquartered in London, United Kingdom, Endava operates within the computers, IT services industry, ranked 74th out of 252 industries by Zacks Investment Research. Despite recent concerns due to a decline in net cash from operating activities, adjusted free cash flow, and changes in client counts and revenue distribution, Endava's strategic acquisitions like Galaxy Group aim to expand its North American healthcare presence, highlighting its growth ambitions. Nonetheless, cautious FY 2024 revenue and EPS guidance may have led to perceptions of the stock being undervalued, suggesting that the market reaction could be an overcorrection in light of Endava's strategic focus on diversification and growth.
Imagine you have a friend who's a star at crafting incredible sandcastles. This buddy, Taylor, is known for their show-stopping entries in the annual Big Sandcastle competition, consistently snagging awards and drawing crowds. Yet this year presented some unexpected challenges for Taylor. First off, Taylor experimented with a new sand and water blend, aiming to give their castle an edge. However, this mix didn't shape up quite right, leaving the castle's details a bit off from their usual standard. It still wowed, but wasn't up to their top-notch past work. Noticing fewer familiar faces in the audience, Taylor pondered if their regular supporters had other plans or were exploring other builders' creations. Attempting to broaden their audience, Taylor ventured to new beach spots, yet this move didn't boost their visibility as hoped. Undeterred by these setbacks, Taylor hatched ambitious plans. They partnered with Alex, a renowned sand sculptor with a strong following on distant shores, aiming to blend their talents for future masterpieces. Additionally, Taylor secured a collaboration with the local beach club to feature their upcoming project, promising to reel in a significant crowd. Acknowledging the recent rough patch, Taylor tempered expectations for their next creation, focusing on delivering a solid and stunning piece rather than their largest yet. Confident in their collaboration with Alex and the beach club deal, Taylor remained optimistic about regaining and surpassing their prior popularity. In the face of the latest sandcastle, not drawing the usual applause, and the sandwater experiment falling short, Taylor's resilience shines. By adapting their strategy, joining forces with new allies, and setting sights on future endeavors, Taylor exemplifies the spirit of bouncing back from challenges, eagerly anticipating their next grand success. Drawing parallels between Endava and Taylor, we see how both faced challenges that temporarily dimmed their usual shine. Like Taylor experimenting with a new sand mix and finding changes in their audience, Endava navigated shifts in its operational cash flow and client demographics. However, Endava's strategic moves, akin to Taylor's partnership with Alex and the deal with the beach club, demonstrate a clear focus on growth and diversification. This story underscores the importance of resilience, strategic alliances, and adaptability in overcoming obstacles and setting the stage for future successes, mirroring Endava's response to its fiscal year projections and market reactions.
Today's pick number 4 is NVD. Nvidia's stock has shown a bullish trend, driven by strong quarterly earnings, positive forecasts in growth sectors like gaming and data centers, and technological advancements in AI and deep learning, which bolster investor confidence. Consequently, the Granite Shares 2x Short NVDA Daily ETF designed to inversely track Nvidia's performance, appears oversold as investors move away from bearish positions on Nvidia. The bullish sentiment surrounding Nvidia undermines the value of inverse ETFs, like NVD, leading to its price drop in the oversold condition, which is further amplified by the leveraged nature of the fund that magnifies daily performance shifts.
In a city buzzing with innovation and excitement, we have our hero, Nvidia Nick. He's the brilliant inventor behind some of the most incredible tech gadgets that everyone can't stop talking about. His creations, ranging from games that feel like real adventures to computers that can almost think on their own, are not just popular, they're changing the game. Now, enter the NVD mirror, a magical-looking glass that reflects everything about Nvidia Nick's world, but in reverse. When Nvidia Nick succeeds, the mirror dims. It thrives on the rare occasions he faces setbacks, shining brightly when his luck seems to turn. However, there's a twist. Nvidia Nick hardly ever stumbles. He's on a winning streak, making breakthroughs left and right. Here's where our tale intersects with the world of trading. As Nvidia Nick's success story unfolds, everyone's drawn to his achievements. They're buying into his vision, literally investing in his continued success. This shift in focus makes the NVD mirror, which bets on Nvidia Nick's fall, less and less appealing. It's oversold, overlooked, and fading into the background because, in a world captivated by success, who wants to invest in the opposite? The mirror's oversold state reflects a simple truth in trading. When confidence in a company like Nvidia Nick's inventions skyrockets, interest in instruments betting against it, like our inverse ETF NVD, dwindles. The magic of the mirror fades not because it's lost its power, but because the crowd's belief has shifted entirely towards the positive, making the contrarian view less popular. So, traders, in the language of our 12-year-old selves, NVD is like rooting for the villain in a story where the hero keeps winning. The excitement, the energy, it's all with the hero. And as long as our inventor keeps dazzling the world with his genius, the mirror that hoped to reflect his failures remains, quite frankly, a little lonely and a lot oversold.
Today's pick number 5 is SGML. Sigma Lithium Corporation is involved in producing battery-grade lithium. Sigma Lithium Corporation is based in Vancouver, Canada. SGML operates within the electronics miscellaneous products industry, a sector ranked 193rd out of 252 industries, according to Zacks Investment Research. Sigma Lithium's current perception as oversold can be attributed to its remarkable achievements and potential that might not be fully reflected in its stock price. Despite operational profitability ahead of expectations, significant resource expansions and aggressive growth projections, broader market dynamics and fluctuating lithium prices have contributed to stock volatility. Analyst optimism, based on ambitious income forecasts and strategic positioning for potential acquisition, underscores a mismatch between market sentiment and the company's intrinsic value. As Sigma navigates these complexities, its role in the green lithium supply for renewable energy and electric vehicles continues to solidify, suggesting that its current market valuation may underestimate its future impact and potential.
Imagine, Sigma Lithium is like a superhero who found a magic rock that can help make the world a better place by making electric cars run and helping use clean energy. This superhero has been doing an amazing job, finding more and more of these magic rocks, way more than everyone thought they could, and even starting to use them to help people faster than expected. But even though Sigma Lithium is doing such great work, not everyone sees how awesome they truly are. The place where heroes are judged, let's call it the hero market, is a bit like a roller coaster. Sometimes it goes up and sometimes it goes down, depending on what people think is happening in the world, like if there's less demand for the magic rocks or if there are too many of them. So, even though our hero is doing better than ever, finding loads of magic rocks and planning to do even more amazing things, the hero market is a bit shaky. It's like when you do a fantastic job on a project, but because everyone else is worried about something else, they don't notice how great your work is. Some wise people, let's call them the hero analysts, believe that Sigma Lithium is like a hidden treasure. They think that the hero is doing so much good and has big plans that could make an even bigger difference in the future. They believe that soon, everyone will see how important Sigma Lithium's mission is, especially as we all want a cleaner and greener planet. So, in our story, Sigma Lithium might seem undervalued or not fully appreciated right now. But just like in any good superhero tale, their true worth and the impact of their magic rocks, lithium, are bound to be recognized as they continue to help make the world a better place for electric cars and clean energy. It's just a matter of time before everyone sees Sigma Lithium for the hero it really is.